Now, Kayode, looking at how our market performed last week, what's your take? I mean, there was a lot of talk about how the MPC's decision to increase the cash reserve ratio sort of made investors trade more cautiously. What is your take on what really drove the market last week?
I think the market last week started off really strongly on Monday. I think we gained by over 1%. Then, as I said, Tuesday, Wednesday, Thursday it was bearish. Then Friday came back up. So all in all, the week was up 0.86%. I don't think the MPC results had that much of an effect on the market, to be honest, at the moment. I think everyone's ready to see what happens, how the banks and the fixed income market treats the MPC result. And that will have the knock-on effect on the equity market.
But I mean, what's your take then? I mean, there was a lot of debate. Is it profit-taking? Why are we seeing our markets down when we're actually in the heat of sort of earnings season? I mean, should our markets be down at this period? This is the time when we see investors sort of trading the market more. So what really is your take as to what dragged the market down?
I think if you look at it, the market's had 7 weeks where it's gone up consecutive, which is a bit of a record considering the last 2 or 3 years. So the market is doing pretty well. And if you look at the results, like you mentioned the banking results, the headline figures were impressive. But if you drill down things like Union Bank, the results, their profit is actually from less provisioning and a tax break rather than actual net interest income went down 24%. So I think the market is looking at the figures and drilling down into the figures and saying, okay, this is the headline note. What exactly is happening with it? And they're not that impressed with some of the results that are coming out. So I think that's part of the reason.
Yeah, well, Kayode, looking at the banking sector, it was bearish on Friday. We're expecting a better performance because of the Q2 results coming up despite Union Bank. But like you said, the MPC decision, everyone's sort of worried about how that's going to affect banks. And in fact, we saw interest rates on the interbank market actually fall yesterday due to a circular that the CBN did release again, where they said that deposit money banks or discount houses that obtain funds from the CBN's lending window are not allowed to simultaneously place funds on the interbank market. And of course, any bank that places funds on the interbank market are not allowed to access the window. So we're seeing interest rates sort of coming down there. The CBN bringing out this new circular saying banks are not allowed to do this. What is your take on all this and how, of course, it's going to sort of trickle down to the banking sector?
It's going to affect the bottom line. For a lot of banks, they're very liquid at the moment through to the AMCON and CBN intervention. And the growth in real sector lending has not matched the liquidity. So a lot of them are making money from fixed income in government securities and also the interbank market. Now, if the yields in the interbank market start to fall, and there's not a subsequent increase in lending to the real sector, then this could affect Q3 and Q4 results for the banking sector. And I think a lot of investors are looking at that because the real question now, the banking reform seems to be over, is one, how are banks going to start making money from the real sector? Are they going to start in the real sector? I think another thing is for certain banks like UBA, even Access Bank, they have international subsidiaries. CBN have brought a couple of circulars which is stopping them from recapitalizing those subsidiaries with money from Nigeria. Now, a lot of people are looking at how they're going to treat those subsidiaries, and I think there are a lot of questions on the banking sector which investors are looking at.
What about the manufacturing sector? I mean, we saw Nestle come out with pretty good results last week, although we did see their costs sort of going up about 30%. Unilever also came out with their results on Friday, which were not so good at all. So what's your take on the direction we're seeing that sector going?
I think you're seeing where certain companies are doing better than others, and they're looking at companies that are being more successful. If you look at three pretty major manufacturing companies, PZ, Nestle and Unilever, the results are quite different. PZ announced big losses. They blamed the insurgency in the north and disrupting distribution. Going forward, they still believe Nigeria is a key market for them, and they invested over $1 billion, they said, in Nigeria going forward. So, but the results were not that impressive. If you look at Unilever, they had an increased turnover about 1%, PAT increased by about 5%, which is decent considering where the market is at the moment. But when you compare it to the likes of Nestle, who opened a new factory in Ogun State recently, which probably improving their profitability and their efficiency, their turnover increased by 24%, but PAT increased by about 60%. And so you see where certain companies seem to be able to manage the market better than others, and they're proving real winners, and investors are going with them.
Now, of course, looking forward on how market is going to perform this week, we have some news coming that NSC is going to be inaugurating their Islamic index, the Lotus Islamic index today. Now, of course, how do you think this is going to impact the market? And going forward, how do you think this index particularly is going to perform?
To be honest, I don't think it's going to have that much of an impact on the market. Our market is not doesn't have the breadth to support such products. Okay, if you look at what's going to make up the Lotus index, is there going to be liquidity in that index? I think it's good to have new products in the market, and it'll be interesting whether it attracts Middle Eastern funds to come into the market. But the problem is that a lot of Middle Eastern funds that will be attracted to this, they need liquidity. And right now, the Nigerian market has not got the liquidity where they can put in $50, $100 million straight into the market and hope to can get it out if they want to. So that's what's distracting them from those. And locally, we haven't really got a Sharia and Islamic banking market. I mean, CBN is trying to develop non-interest banking, and companies like Lotus trying to bring Sharia compliant funds. But Nigeria has been more and more secular investments, and going forward, this Islamic banking could take off. But at the moment, I don't think it's going to have that much of an impact.
Well, thank you so much, Kayode, for giving us